Imagine this, Warren Buffett is sitting on more than $100 billion in pure cash, not stocks, not real estate, not crypto, just liquid money ready to move, and while critics call it crazy. The truth is that the wealthiest people on earth quietly hold far more cash than financial. Advisors recommend because they understand that real power in finance comes from optionality, timing, and the ability to strike when others are frozen with fear. Here's a perspective that flips traditional advice on its head. While most people rush to invest every dollar, the world's smartest investors deliberately keep massive piles of cash because they know that the greatest wealth is often built not during normal markets, but during rare moments of chaos when only the prepared can act. What if the habit that could transform your financial life isn't a new investment strategy, but something far simpler, holding substantial cash reserves, because cash quietly creates freedom, speed, negotiating power, emotional stability, and the rare ability to act while everyone else is panicking. Warren Buffett holding enormous cash reserves isn't fear. It's patience combined with strategic readiness, because when markets crash and panic spreads, the only people able to buy extraordinary opportunities are those who already have liquid capital available. Most financial advice focuses on optimizing spreadsheets, maximizing returns, minimizing fees, compounding percentages, but real life is not a spreadsheet. And wealth in the real world is measured by freedom options and the ability to act without desperation. Think of financial knowledge like nutrition advice. Knowing the perfect diet doesn't mean you're healthy. And similarly, knowing perfect investment strategies doesn't help if your finances leave you stressed, trapped, and unable to move when opportunity appears. True wealth is not simply a large net worth figure on paper, but the power to make decisions calmly while others are trapped by fear, debt, or illiquidity. One major reason the wealthy keep cash is simple. During market crashes, assets go on sale, but only people with available cash can actually buy them. When markets collapse, most investors cannot act because their money is already tied up and declining in value, leaving them emotionally frozen and financially restricted. Meanwhile, the person with large cash reserves is not panicking, but shopping for opportunities that appear only during crisis. Imagine holding $200,000 in cash while friends criticize you for losing money to inflation and missing stock market gains. Then market crash arrives, stocks drop dramatically, fear dominates the headlines, and suddenly that cash becomes the most valuable tool you own. Instead of watching helplessly, you begin purchasing high-quality assets at massive discounts that may never appear again for a decade. What once looked like lazy money suddenly becomes the engine that multiplies wealth. Missing a steady 10% return might cost you thousands each year, but missing a once-in-a-decade opportunity to buy assets at half price can cost hundreds of thousands. Most people calculate the visible cost of holding cash, but almost nobody calculates the invisible cost of not having cash when opportunity appears. Another powerful benefit of cash is something rarely discussed: walkaway power. If you had 2 years of living expenses in pure cash today, your entire relationship with work and life would change. A toxic boss would lose their control over you because you would know you could leave tomorrow without panic. A bad business deal could be rejected instantly because you wouldn't be desperate for the money. Financial independence often begins not with huge investments, but with the ability to say no. People with cash reserves negotiate better because they are choosing opportunities rather than begging for them. Ironically, this lack of desperation makes employers, partners, and clients value them even more. Many high earners feel trapped because they spend everything maintaining an impressive lifestyle. Meanwhile, someone earning less but keeping strong cash reserves often enjoys far greater freedom and confidence. Cash also transforms the way you invest by allowing you to think long-term. Investors with little cash often panic during downturns because they fear needing the money soon. This fear forces them to sell at terrible times, destroying long-term returns. Investors with large cash reserves behave differently because they never feel forced to sell. They can calmly wait for their investment thesis to unfold over years instead of months. This patience alone dramatically improves investment performance. Studies repeatedly show that average investors underperform their own funds simply because of emotional decisions. Cash reserves act like a psychological buffer that prevents these destructive reactions. Instead of fear, downturns begin to feel like opportunity. Cash is therefore not just defense, but a powerful offensive weapon. Wealthy investors treat cash like ammunition waiting for the perfect target. Market crises create extraordinary bargains precisely because most people are financially unprepared. If everyone had large cash reserves, distressed opportunities would rarely exist. The lack of liquidity in others becomes the advantage of the prepared. During recessions, some people struggle to survive while others quietly build generational wealth. Cash also protects against one of the worst financial mistakes imaginable: forced selling. Consider someone fully invested who suddenly faces a financial emergency during a market crash. They must sell investments at the lowest prices simply to survive. Those same assets might triple in value later, but the opportunity is gone forever. A person with cash reserves avoids this trap completely. Emergencies are handled calmly while investments remain untouched. In fact, the crisis may even become an opportunity to buy more assets at bargain prices. Cash also changes your brain chemistry in powerful ways. Financial stress pushes the human mind into survival mode where clear thinking becomes difficult. Research shows financial anxiety can reduce cognitive performance significantly. When money pressure disappears, creativity and strategic thinking return. People with strong liquidity sleep better and make calmer decisions. This mental clarity often leads to better opportunities and smarter investments. Interestingly, the financial industry often discourages holding too much cash. Advisors, banks, and fund managers earn fees when your money is invested with them. Cash sitting in your account generates no management fees. This doesn't make their advice completely wrong, but it does explain their incentives. The wealthy often ignore conventional advice and quietly maintain far larger cash reserves. Another advantage of cash is speed. In business and investing, speed frequently determines who wins the deal. A property priced far below market value might sell within days. A small business owner might need a fast buyer immediately. The person with cash can act instantly while others are still arranging financing. Sellers often prefer fast cash deals even at lower prices. That discount alone can exceed years of stock market returns. Liquidity, therefore, becomes a competitive advantage. Cash also repels debt. Many people fall into high-interest debt not because they are irresponsible, but because emergencies arrive when they have no cash. Car repairs, medical bills, home repairs, and sudden expenses quickly become credit card debt. Interest then quietly drains wealth year after year. Someone with strong cash reserves simply pays the expense and moves forward. In many cases, paying immediately even earns discounts. Hospitals, contractors, and service providers often reduce prices for fast payment. Cash therefore saves both interest and stress. Perhaps the most powerful advantage of cash is the ability to invest in yourself. Life-changing opportunities often require both money and time. Starting a business, learning a new skill, or changing careers may require months without stable income. Without cash, these opportunities remain dreams. With cash, they become realistic experiments. Many successful people can trace their breakthrough to a moment when they bet on themselves. That leap usually required financial runway. Cash provided the courage to try. A hidden cost of not having cash is not just inflation, but missed versions of your future self. When you combine psychological peace, opportunity readiness, negotiating power, and investment discipline, cash becomes far more valuable than it appears. A person might lose some purchasing power to inflation, but gain freedom, speed, and opportunity. Over decades, those advantages compound into enormous wealth differences. The lesson is not to avoid investing, but to balance investing with powerful liquidity. Cash creates the foundation that allows every other financial strategy to work better. The richest individuals understand that money locked away is not always strength, but flexibility is. In the end, the quiet habit shared by many of the world's wealthiest people is simple yet powerful: K. Eat meaningful cash reserves, because when opportunity, crisis, or transformation arrives, the person with cash is the one who gets to act.